When I was young, I had dreams I'd blow like a 9 milli. Growing up broke, we ain't never had a dime really. Never had a dime.
Alright guys, following the last video on gold, it seems to be quite popular. So what I'm going to do is I'm going to share with you my charts and I'm going to show you a very decent opportunity that we're looking at on gold. So switch over to the charts, enjoy, and I'll see you in a sec. Alright, so I'm going to go through this opportunity on gold. I did one in the last video and it was very popular. Lots of you guys enjoy the analysis on gold, and we take a look at gold quite often in the live room. So I'm going to share with you this opportunity that we're looking at, and first thing I'm going to go through is the trend. If you're familiar on how to read price action and you can identify a trend, you're going to see that bottom left to top right, okay, this is a bullish trend. And you can see as identifying a trend is what we teach in week 1 of the Ultimate Trader Transformation course. But you're going to see that we've put in new structure high here, followed by an outside return, followed by a new structure high. We've broke and closed above the previous high, giving us a new structure high. So trend continuation traders are looking at this zone and thinking, right, how can I get involved? Because if we get a pullback, which you can see we're putting in this complex pullback here, we can look to get involved. And what I'm going to do is I'm going to share with you how we analyze the highest probability area to get involved should price action push down to that level, because we don't want to just enter as soon as we get a pullback. That's not going to give us the risk reward we want. You're going to be placing your stops in no man's land. That is rookie weight. That is a rookie style of trading. We know we want our stops below structure, so we want to wait for price action to meet our rules before we can get involved in the trade. And I'm going to share with you a very effective method of building out that confluence and that high probability zone that you want to pay attention to before you look for your entry. Okay, so the first thing I'm going to do is I'm going to bring on an equal measured move. Okay, this is known as a harmonic move or an ABCD pattern, equal measured move. And essentially, well, we know these are very powerful patterns anyway. There's traders that just trade off of these patterns. But I also found that when we were doing some testing on advanced patterns that completed with an ABCD pattern or an equal measured move at completion of the pattern had a 19.5% higher win rate than those that didn't. And when I also tested double tops and double bottoms, retests of structure at the completion point of a pattern, we also found that they had an 18.5% higher win rate. Okay, so you want to pay attention to those sort of things. You want to bear that in mind when you're doing your testing. But I just wanted to share with you how powerful we know these patterns alone are powerful. Okay, so not only that, it's going to put us right down here at a level where we know we're going to get a good risk reward because our stops are going to have to be below the low, and as a trend continuation trader, our targets are a retest of the highs. So you can already see the risk reward is going to be well in our favor. Okay, and not only that, if we've got previous structure, we've got this double top here which become a double bottom in that zone as well. If you get stops below this structure level, it's a decent protective area for stops. So we're going to get a good stop placement, we're going to get a good risk reward. Now we just need to build out that confluence, see if we can get any further confirmation and confluence down in this zone and tighten down this kill zone, right? Now, next thing I'm going to mention is if you're familiar with the fib inversion trade, well, this is the exact setup you're looking for. And if you haven't already seen the video on the fib inversion, I did a full video on that. This is another strategy we teach in the Ultimate Trader Transformation course. Feel free to go over and check that out after this one. But this is essentially what you're looking for. You're looking to the IPDE, identify a bullish trend, predict where market's likely to go next. Well, we're looking for a retest of the highs. This is just going to be a 1 in, 1 out target just for the simplicity of this video. And then you decide how you're going to get involved. Well, if you're a fib inversion trader, you're looking for this exact setup, okay? And then you just decide how you're going to get involved. Well, that'll be the 1618 inversion. So if you are a fib inversion trader, you're entering aggressively at a test of this 1618 extension or inversion. Right, and typically, conventionally, I should say, your targets for a fib inversion trade would be at the 618 retracement, Or you'd be, that's the conventional targets. If you're a trend continuation trader and you're looking for a retest to the higher for targets, perhaps you shoot for target 2 up there, or you just take your full position off at a retest to the high. But just for the simplicity of this video, conventional targets on the fib inversion are taught at the 618 retracement. And stops, it's typically a 2-to-1 trade, so your stop is a half measured move of the target. So it's always a 2-to-1. Color this in red so it's easily identified as risk, and that's what you're looking at, right? So that would be the fib inversion trade, but that's an aggressive entry. So how can we still get further confirmation and really hone in and build out confluence at this zone? Well, let's bring on our fib extension tool and see if we can get some confluence, a nice little fib cluster or some fib confluence lining up down at that zone. And you can see if we bring on our extension tool, go from swing high to swing low, you're going to see we've got a 1414 lining up perfectly with that 1618 inversion. So already we've got a nice fib cluster, okay, nice little fib confluence down here, lining up with the ABCD equal measured move in that zone as well. It's also putting us in an area where we've got a good risk-reward ratio, even if you're looking for a conservative entry, like a higher high, higher close candle, right? And if you're not familiar with higher high, higher close candle or lower low, lower close candle, again, it's a simple entry technique that I did a video on. I think it's had something like 200,000 views, or it's well on its way there. Go and watch that after this video, and you'll understand perfectly what we mean by that entry. Okay, so we're pushing down. If we push down to this level, we're building out confluence. Instead of this being a broad kill zone, right? You don't want to just enter this as you push down into this zone. That's a rookie style of trading. You're going to get stops in a terrible place, and you don't really know what you're doing. Okay, we want stops below structure. So we're now narrowing down where the highest probability area is in this market for it to have a reaction or reverse or continue to the upside. And we've got some nice fib confluence. So let's continue with the fibs. I'm going to bring this time a fib retracement from swing low to swing high to see where the retracement, if we get any fib confluence on the retracement. Now we've got a couple of levels there. We've got a 786 and an 886 lining up at that zone. Now the one that's going to be more meaningful for this this opportunity in this video is the 886, and I'll explain why if you haven't already guessed. If you're familiar with advanced patterns, then these ratios here, X to A to B, B to C, and a CD completion will give you a bat pattern entry down at 1270.96. So we've now got two aggressive entries. We don't have to wait for any conservative higher high high close or a double bottom or anything like that. We can enter aggressively, and we've got all this confluence lining up at this zone, which presents a very high probability trading opportunity. Now, will price action push down here? I don't know. And I often get asked the question when talking about these patterns that if we're up here, well, if it's going to complete down at the decompletion, why don't you just sell it now? Well, the answer to that question, if you don't already know, is I have no idea what the market's going to do ever, right? And if anyone tells you that they know what the market's going to do, run a mile. I have not tested the probability that price action, once it hits a 50% retracement, then hits a 382, I have no idea that it's going to roll over and hit the 886 retracement. However, I do know that if the ratios are met in this order and we hit the 382 and then you complete down at the 886, I know that there's a high probability that we're going to see further movement to the upside, or a reaction or a rally. Okay, I can even tell you the percentage of how many times that's likely to happen, on each pair in my portfolio. I know how many times I'm likely to be right, wrong, and I know everything about the strategy because I've tested it, right? But the beauty of being able to read price action is really that if you can combine pattern trading with your trend continuation trading, instead of taking conventional targets on this, you can look to take targets as a trend continuation trade, and look what that does for your risk reward, right? Even if you're using an ATR based stop or a 113 inversion based stop like I use for patterns, you can see it's going to be exactly the same place as the fib inversion as well. Nice protective stops below that support level there, and very, very nice risk reward. Okay, so this looks a bit confusing because I've put so many tools on here, but I just wanted, for the purpose of this video, to demonstrate how we can use lots of different filters and confluence, and I've given you lots of different reasons to look for potential entry areas in this market. And I'm not saying trade this, I'm saying watch what happens. May not even push down here, right? But if it does, I think you can agree there's a very high probability in this zone for a reaction. And that's it. So that's the video. If you like it, please click the like button, click the thumbs up now, subscribe if you haven't already, comment below on anything else you'd like to see, and I'll gladly go through that in the future videos. And don't forget to share this on your social media platform as well, your favorite platform. Lots and lots of people enjoy the videos on gold, trading, the markets, anything really, any technical analysis based, you guys seem to really enjoy. So this is the stuff we do every day. We teach this stuff on the 12-week the Ultimate Trader Transformation course, and if you're into patterns, there's a separate course just for those. They're obviously included in the Ultimate Trader Transformation course, but there is a separate pattern trader course as well. So all the links are below the video. If you're interested, click on them, and I look forward to working with you very soon. If not, just keep following along, pick up the knowledge bit by bit. But if you're really, really interested in going for it, then all the information you need is below. So till next time, guys, take care, and I'll see you then.
When I was young, I had dreams I'd blow like a 9 milli. Growing up broke, we ain't never had a dime, really. Never had a dime.